Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week get everything you need to know in 90 seconds at 9 o'clock, with news that China's expansion, currently the engine driving global recovery, still needs Beijing's fiscal stimulus support apparently. But first, food prices are rising globally. The November increase did not only mark the biggest month-on-month rise since July 2012, but it also resulted in the index reaching its highest level since December 2014. China seems to be crowding out others with aggressive buying driven by a slowly deteriorating food security issues there. This is particularly true for dairy and meat. Chinese futures pricing for corn, palm oil and rice are all at historically high levels, and Chinese prices for iron ore and coal round out the rising evidence that Chinese demand is stoking all commodity prices. Copper is at a 7-year high and aluminium prices are rising sharply too. All this is happening while the US and Europe are in the demand doldrums. But it is a boon lifting the Aussie dollar and to some extent the New Zealand dollar as well. And Chinese car sales increased more than 12% in November from the same period a year ago to log the highest monthly sales this year. Chinese steel production is also at a record high. However, more Beijing fiscal support is on the way to ensure their economic rebound doesn't stutter. This is interesting that Beijing thinks such support is still necessary and indicates that their recovery is not yet self-sustaining. In the US, consumer sentiment posted a surprising increase in early December due to a partisan shift in economic prospects. Following Biden's election victory, Democrats became much more optimistic and Republicans much more pessimistic. And as there are many more Democrats than Republicans in the country, that has raised this index. However, this index is still 18% lower than where it was a year ago. In Canada, they've set a track for sharply rising taxes on carbon. The price on carbon will be increased by $10 a tonne until it reaches $50 a tonne in 2022, and then it will rise annually until it reaches $170 a tonne in 2030. US Treasury 10-year yield will start today at just under 0.90%, and the price of gold is marginally softer today, down $2 to $1,840 an ounce. Oil prices are unchanged today from Saturday, still at just on $46.50 a barrel in the US, while the international price is at $50 a barrel. But at these levels, the number of US and global oil rigs being brought back into production is rising again. And the Kiwi dollar is little changed. It's still at 70.9 US cents. But against the Australian dollar, we've had a minor firming to 94.1 Aussie cents, and against the euro, we're lower at 58.1 euro cents. That means our trade weight index is unchanged to start the week at 72.8. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.